You've said that if you want to 10x your money, buy Bitcoin. If you want to 100x your money, buy Bitcoin with someone else's money. And if you want to 1000x your money, then buy Bitcoin with someone else's money and lever it. But for the average person watching who's probably a wage earner and not a business leader, what do you think is the best way to 100x your money? Can you still do it with Bitcoin, and what types of strategies can be deployed?
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you adopt, you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari, right? If you look out 20 years. So you have to keep your job, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead. And with regard to leverage, the intelligent leverage for the individual is generally long dated, mid dated mortgage debt. So if I have any kind of property, if I have a house, I would put a long mortgage on it, a 10-year mortgage, or 15 to 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So, I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive, and don't pay off your mortgages. Don't get debt free. Any capital you have that's not marked to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
I feel like more of the lesser known or zombie companies are the ones really taking action. And you said that it's the companies that are on a need to know basis that are really embracing Bitcoin. Some of the biggest names are going to come in last. Can you explain that?
Well, we've got haves and have-nots. CNBC talks about 100 tickers a day, but there's 100 stock tickers total, and they make up 80% of the trading volume. There's 12,000 public companies in the U.S. There's 4,000 or 5,000 on NASDAQ and New York Stock Exchange. Most of them, the market has lost interest in, and they're competing against a Google or against Amazon or against a Microsoft or against an Apple. So if you're one of those mid-sized, small companies and you're staring at these trillion-dollar, digital giants, and no one cares about you, then at some point after struggling like that for month after month, year after year, you start thinking it's kind of hopeless. And so the explosion in interest in Bitcoin treasury strategies, I think, comes because companies are realizing that there's hope for them. There's an opportunity. And it is by plugging into the next great digital transformation, right? The way that you actually get back on top, the way you start re-energizing a company and growing it, is by digitally transforming your balance sheet. And the companies who've done it earliest are having extraordinary success. Companies like Strategy, companies like MetaPlanet. And so as more and more companies embrace the Bitcoin standard, and as their stocks start to perform, and as their investors start to see success, the idea is spreading because, no one takes a company public wanting to be an also-ran or be roadkill for Amazon.
Why do so many companies resort to things like stock buybacks or acquiring other companies when they're deploying capital? Why not buy Bitcoin?
The conventional corporate finance playbook is cash is trash, and cash underperforms the S&P index. And so the S&P index is the cost of capital. And if you've got excess cash flow, then you need to return it to the investors so they can invest it and get that cost of capital or get the S&P return. And you either do it with a buyback or you do it with the dividend. I think the primary reason the market concluded that is because for 100 years, the Treasury reserve asset of every public company was short-dated Treasury bills. And they never had another Treasury asset. Your choices would be Treasury bills, gold, or Bitcoin. Gold was the reserve asset of the 19th century. Corporate sovereign debt, like 30-day T-bills, is the Treasury asset, the reserve asset of the 20th century. And Bitcoin is the reserve asset emerging in the 21st century.
It seems like a lot has been happening with the sovereign debts and with the bond market that people weren't expecting. We have a lot of macro headwinds that even Bitcoin, I think, is facing. I'm sure the audience would benefit just from your macro perspective. We have these global war threats and tensions, the trade war. What do you think about that? And how should people look at Bitcoin and how should investors really analyze these concerns?
Well, all of these actions are creating uncertainty in the market, right? Trade uncertainty, operational uncertainty. How do I organize my supply chain? What products should I stock on my shelves? What products should I buy? How long will it take? What services do I need? Where do I source the services? That uncertainty creates massive inefficiency. It creates dislocation. Investors are discounting the future cash flows for the next 10 years of a given business. And so if it's uncertain whether the business will exist and in what form and how profitable it'll be, then they tend to shoot first, ask questions later, or in this case, sell first, ask questions later. Their view would be, let's just back away from the market until it becomes less uncertain. That's what is driving the macroeconomic headwind right now. Whenever a company runs into a difficult time like that, whether it's COVID, or whether it's the current, tariff wars, it behooves the company to be extremely well capitalized. What you would like is to have a company that has a deep, deep pool of liquid assets you can rely upon, even if your core business revenues get zeroed out. If you don't have that, you're going to go bankrupt in a prolonged crisis. Herein lies the solution, the promise of Bitcoin, and the problem with traditional corporate finance. Traditional corporate finance teaches these companies to decapitalize. So they've all been decapitalizing. They've been surrendering their capital via buybacks and dividends. So when they're not well capitalized, and they run into economic uncertainty in their operating business, that creates extreme anxiety for the employees, the executives, the customers, and the investors. The promise of Bitcoin and the Bitcoin standard is that every company can be well capitalized. Because if you simply start sweeping your cash flows into Bitcoin, or you convert your dividend into a Bitcoin buy, or if you convert your buyback of stock into a buyback of Bitcoin, then your enterprise value over time would double. And your organization would be valued partially on future expectations, but partially on the assets you own. And so you can imagine when 95% of the value is future expectations. When they become uncertain, 95% of the value becomes uncertain. But when half the value of a company is based upon the assets they own, right, then they have a built-in insurance policy or a shock absorber, and they have the luxury of being able to sit back and see how things work out, but without being desperate or taking short-term actions. And Bitcoin offers one more collateral advantage, which is the more uncertain the operating world gets, the more valuable Bitcoin becomes and the more compelling the idea is, because there are no tariffs on Bitcoin. Bitcoin doesn't have supply chains. It doesn't have all of the regulatory risk, the tax risk, the operating and the execution risk that you have when you have a business based upon providing products and services in a particular way.
I've met so many people at this conference who have created tremendous wealth just from buying MSTR. How does that make you feel? You've changed lives. I mean, people have expanded their families, they've retired early. That must feel good.
Yeah, it's gratifying when you can help people, and so probably no there's no greater compliment than someone says like, you helped me financially to be secure in the future hopes and aspirations for my family.
Can you share more about the new products that you've released, Strife and Strike?
Yes, yeah, the exciting thing about them is Strife is a preferred stock that we built on top of Bitcoin. It's about 5x over collateralized right now. So it's a very over collateralized preferred stock that pays a 10% dividend at par at 100. So if you buy it, you collect a 10% dividend forever. It's perpetual. There's no call option. So you could literally hold it for 30, 40, 50 years. And that's for people that maybe they want to put it in their retirement account, or they want high quality income. Strike is for people that would like upside, but they don't like the volatility of Bitcoin, and they would like some kind of principal protection. So Strike pays an 8% coupon, so you do get a dividend yield at 8% par, and it has conversion rate that works out to be about 35 to 40% of the upside of the common equity. So it's like, you're trying to get 80 to 100% of the performance of Bitcoin with downside protection, with a living stipend, right? With a guaranteed dividend. So we created those two different securities for people that have different risk return profiles. And when you pair them with the equity, what it means is if you want to outperform Bitcoin, and you're all about performance and you want volatility, then you would buy MSTR, the common equity. If you want something that's got guardrails and a bit of a stipend built into it and a downside protection element, that you buy Strike. And if you just want pure fixed income and the most you can get, you would buy Strife.